I'm Bobby Goldie, and welcome to What's Brewing, where we dive into IAT's products and services and cover hot topics in the industry that you want to know more about. After you leave this webinar, you'll see a short survey pop up in your browser. If you don't already know, IAT stands for Insurance Answers Together. So please take a moment to let us know what you want to hear so we can answer. You see how I did that? Answer. Today's guest is Ken Chapman. Ken is the EVP of IAT Surety, and he has more than 30 years of experience in the surety bond industry. He joined IAT in 2018 following the acquisition of IFIC Surety. In fact, this year marks 5 years of surety joining the IAT family. Ken, thank you for joining us today.
Great to be here, Bobby.
So, you know what we're going to do? We're going to dive right into what everybody wants to hear about. Why wait to the end? So folks want to really talk about the current climate affecting the surety market. So let's start with what's on everybody's mind personally and professionally, the recession.
Mm-hmm. Well, it's debatable whether we're in recession right now, right? But I think everybody is supremely focused on the economy, right? Whether personal or business or what have you. And, you look at a few of the data points out there, interest rates, right?
Mm-hmm.
We're all watching what's going on with that. We're all trying to evaluate, well, what will that impact be on business, consumer spending, other things. I think the hard thing that's about recession, at least the way I internalize it, looking at what different economists might share or their points of view, some might say that we are in recession, a slight recession. Others say, no, it's still out there. Is it going to be a hard landing? Is it going to be a soft landing? There's a lot of things going on. I think the thing that complicates it for everybody is that consumer spending still seems to be at pretty high ebb. And really the reason that is that we all, or a number of us probably built up some pretty solid personal balance sheets during the pandemic. We weren't going anywhere, we weren't spending money, and so that money is now looking for a home. So as we look at the economy, that's a big part of what we have to handicap in our underwriting. Absolutely. But I would just say that stay tuned every day because it seems to change a little bit more. Look at the data points.
And so thinking of that in the surety market, are there certain industries that would impact more than others with regards to the recession when you're doing your underwriting?
I would say so. Companies that maybe used a fair amount of debt to finance their operations for growth when credit was, I wouldn't say free, but nearly free.
Yes.
And now as interest rates start to climb, and now you have the prospect of having to refinance some of that debt in the coming years, the question will be do these businesses have the margins to do that? And so that's a big part of what we'll look at in our underwriting. But I think also for the construction industry, especially in the private sector, you've got owners that are stepping back now that have building programs out there that they want to pursue. But as they look at it, the cost of building now, with interest rates climbing 2, 3, 4 points since the lower interest rate days, I think that's got a number of owners that are thinking twice about how they're going to manage their building programs. And so that could have an impact on what's available for contractors to pursue. That's the private sector.
Yes.
Public sector, I think, is a little bit different dynamic. You've got some things out there that hopefully we get a chance to talk about. The Infrastructure Investment and Jobs Act.
Yes,
so,
that's actually where I was going to go. I keep hearing about this Buy American. Do you want to go into that a little further?
Well, the Buy American thing, that's actually called BABA, right? Build America, Buy America. And so that's part of the IIJA. And so regulation can be a good thing and a cumbersome thing. And so the good thing about the IIJA is it's going to release several $1 billion over the next 4 to 5 years for much needed infrastructure improvements. The Buy America, or the Build America, Buy America component of it is going to require contractors or people that, whether it's a IIJA project or not, or you have federal matching funds on state or local projects, the rules of the BABA apply. And so what that means is that for contractors pursuing that work, they're going to have to certify to that some part of the construction process, the components, were actually manufactured in the United States. And not only manufactured, but also will be installed in this project.
Wow.
Contractors will be required to certify to these things. And so it's a lot of complex legislation. Small businesses could struggle with this a little bit in terms of just trying to make sense of it. Fortunately, the trade organizations like the ABC and the AGC are all over this, trying to get clarity and guidance to their constituents, and it's also going to help us as surety underwriters as we try to evaluate these projects and the requirements of our contractors.
There are a lot of products. How on earth who's going to watch over this? How are they going to watch over this? And how are small companies, like you said, that don't have the manpower going to be able to manage this? And how do you think that's going to affect you folks as surety underwriters?
Yeah, I mean, for us, it probably would have more of an indirect effect on us. I mean, the contractors are the folks, the vendors, contractors, whoever that are pursuing these offerings for the federal government or projects where federal funds have been made a part of the process. There's a lot more that still needs to happen. I mean, the government, I think, really owes people a more thorough explanation of what do some of these requirements mean, what projects do they actually apply to, what happens when a particular project, because we're still dealing with a little bit of supply chain issues right now as well, right? So what happens if you really can't locate that product and you've got a schedule of, maybe just for simplicity's sake, the job is a 12-month job. Well, if you know it's going to take 6 months to get the product, well, that puts you in kind of a pickle if you're going to go down the Buy American part of it. And so I think there will probably have to be some flexibility in terms of how contracting officers are able to look at this and get the appropriate variances at some point, just try to keep some of these projects on track.
So how about on the bidding side, so you're going to have organizations that come in or contractors that come in and maybe they bid lower than maybe somebody else that's really focusing on the whole Buy America or American. Could you see some implications with that?
Well, you could, and for us, I mean, in the surety industry, it's always a bit of a red flag when somebody comes in, especially low. In our world, we kind of look at if you're 10% more or low than kind of the rest of the pack, that's usually going to involve some more underwriting on the job. Well, what was your competitive advantage over your competitors?
Yes.
And sometimes, you can explain that, right?
Yes.
But maybe it's a situation, I think, with where you're going with the question, that somebody could have overlooked a key construction implement requirement, whether it was iron, steel, cement, whatever it may be, and the rest of the bidders caught that. I think at the very least, if the other bidders are aware of that, because I think a lot of times they're probably going to want to look at who was low and how are they low, how did they beat us. If they can see that somebody was using products that were not per the plans and specifications, at the very least I can see that leading to bid protests, which could slow down, the award of projects and things like that.
Yeah, I almost feel like it could be not only the government keeping an eye on the Buy America, Build American. I could see it as contractors as well that are seeing that, where bids are coming in lower than where it was expected.
Yeah, I mean, contractors they're going to have to look at the bid specs and really scour them. And I think for a lot of folks, and part of what we try to educate both our underwriters and our contractors on is that, this change is coming. And I think that sometimes folks may overlook that this could apply again to a municipal job, a state job, where you've got federal funds involved. And for people that really aren't looking at it that way, unless the bid specs are real clear, and to me they're going to have to be very clear around this. I think the whole other thing for contractors is now you have to manage this compliance, right? And it may require, depending on how much public work they do or where the federal funds are involved, you could possibly need a small army, in fact, to just look at the paperwork, make sure that what you're certifying to that's actually happening. Because the other thing that can happen from a regulatory perspective is that if you're certifying to something falsely, whether you did it knowingly or unknowingly, well, now the federal government has another tool called the False Claims Act. And many states have their own False Claims Act statutes as well. And really the Federal False Claims Act, it's been around a long time. This is nothing new. It goes back to President Abraham Lincoln's days. That's really when it was enacted. As back in the day, you had vendors providing or selling shoddy goods and services to the government, and they were fed up with it, for lack of a better description. Well, that's kind of come back around, right?
Yes.
And so you see many parts of the federal government as they increase the staffing with DOJ attorneys, increase the staffing with various inspector generals. They're serious about stamping out fraud, as they should for all of us as taxpayers, right?
Absolutely.
But contractors and anybody else that's providing goods or services to the federal government, they're going to want to be acutely aware of these things and just making sure that they are over the top compliant.
Well,
It's a changing world.
it sure is. So we might as well then just go into cyber. Cyber is I feel like it's the word in the insurance world for, the last 5-10 years, and it just keeps coming up more and more. So now as surety underwriters looking at cyber, how does that impact your underwriting, and how do you see that impacting the surety market?
Yeah. It's good that the surety industry is starting to bring some focus, to cyber. A surety underwriter, none of us will be expert cyber underwriters, right? But I think we all know of the major dangers that are out there, right? I think everybody's aware of ransomware. People are aware of social engineering. Now, they might not know the path of how all this stuff happens, but they're at least aware of some of the buzzwords. And so really for us, we've put some thought leadership out on this, just trying to look at cyber from a surety perspective. And really, when you step back and look at it, it's not a matter of if you're going to be hacked, it's when you're going to be hacked, right?
Absolutely.
And I think a lot of us, we've even experienced this on a personal note, so that's easily comportable to business as well. And so for us, we will ask our customers about, have you thought through this? Have you talked to your insurance agent? Have you maybe talked to a cyber consultant just to come in and take a look at how you're set up, look at your firewalls, look at, do some penetration testing, things like that can be fairly low threat, but at least can guide you to where you might have gaps, with your systems and an intruder could get in. Because, the wrong answer, I think, for us is that we get the response that, well, we've not had an issue with it before.
Yeah.
Or
they don't go after us.
They don't go after it. We're too small.
Yes.
And the thing is, the bad guys are actually going for those that are less sophisticated, right?
Absolutely.
And so once the breach happens, the next question is, well, what is your plan? And if the answer is that we don't know or we don't have a plan, that's not a very good answer, right?
Exactly.
And so the whole notion behind this, though, is at least to get the dialogue going, right? Put it on somebody's radar screen, because there are so many risks that are facing business these days. It's hard to keep track of all of them, right?
Yeah.
And so there's areas that, for us as a surety company, we've zeroed in on, right? And so we'll look at the regulatory environment, we look at cyber, we look at a few other things, recognizing we can't touch everything. And try to share, that knowledge, again, with our underwriters and with our customers to get the dialogue going, to put people in touch with the right people that can really help them out with some of these risk points.
Absolutely. I was actually in the cyberspace for several years now. It's been the smaller industries being attacked nonstop because they're less sophisticated. It's quicker, it's easier for the bad actors. And, it was interesting when manufacturing started increasing significantly as the industry that was getting attacked the most. And folks thought it was all because of the manufacturing technology and the plant and all of this going on. But it's actually, Mrs. Smith that's been working at the front desk for, 30 years as the receptionist that got the email or the phone call and transferred money or clicked on a link because it was easiest. So,
Absolutely.
And then when you have those conversations with those sorts of industries, you're like, are you thinking of the basic places, right? The easiest places for somebody to
Sure. Well, and fraudsters they've identified construction as a place where they want to go fishing, as it were.
Yes.
Because they know that, there's a number of small businesses there. They know there's a fair amount of PII, personally identifiable information.
Yeah.
They know that there's cash transactions that go back and forth. And so, they're just constantly scouring for those organizations that just don't have adequate cyber type protection. So it is under attack, as it were.
It's very helpful that you folks do that. I can see that being definitely a value add, to at least have that conversation going on sorts of things like
Well,
this.
one other point I'd make about it too is that, the lifeblood of our underwriting is financial information flow and, financial wherewithal for our customers, right? So that they can go out and execute their business plans, and heaven forbid if there was ever a surety claim that, there's some loss absorption power. And so if you're dealing with a smaller customer and a bad actor gets in there and empties out bank accounts or whatever else, not only could that be a really bad day for them, I mean, it will be a bad day for them, but if we have a lot of bonded exposure out there and now no financial wherewithal for them to prosecute the work,
Absolutely.
it could wind up involving the surety company as well, because the liquidity is gone or compromised at the very least. And usually when the money's gone, you're not going to recover it.
No. And, you know, surety folks don't like claims.
No, we don't.
No. So,
We expect them though, right?
yes,
I mean, the product does have to work.
absolutely, absolutely. I mean, in the moving and storage industry, I don't like them either. So totally get it. So with all of that, do you expect increased bond claims activity with these things going on? Like overall in the industry?
Yeah, I mean, it always stands to reason that you would think some economic headwinds, because we are so sensitive to the economy, right? And
Yes.
economic indicators. And I would just tell you, I would have thought that the pandemic, 3 years ago, when kind of the world shut down and before I think the feds really had an idea of what direction they were going to take things, before the central banks really could put together monetary policy to keep liquidity in the system, I think many of us, myself included, we thought this is the black swan event for the surety industry, right?
Yes.
This is going to drive claims. And you step back, you look at our results, you look at the industry results, we had some of the best years ever in 2020 and 2021. So goes that theory, right?
Yes.
That's out the window. But I do think, in what I tell our organization all the time, I do feel like we're in this elevated risk environment. So whether it's regulatory, whether it's cyber, whether it's inflation, whether it's the economy, whether it is whatever it is, we do have more risk. Our customers have more risk today. And for us in the surety industry, there's certain precepts, underwriting precepts, that by and large, if you stick to those and you have access to your customer, you're getting good financial information flow, we're able to ask the questions that we need to ask, we're able to size things up, odds are I think we can manage through this with a limited amount of claims.
Nice.
I think, where carriers become a bit undisciplined in an environment like this, that's maybe where you could start to see some claims. The other thing I would say too is that from a construction perspective, what we've kind of seen through the years as well is that when times are really, really robust, that tends to drive some claims in the surety industry when it comes to contract surety. In as much as, contractors, and I think just human nature, we're all opportunistic, right? You see this point in time opportunity, a lot of work out there. And at times, contractors will overload themselves. It could be more than what they can manage internally and externally in the field. It could be more than what they can finance. And so those are kind of the times where we might see a little bit more frequency in the contract space.
All right. Well, that's very helpful. So, so what can our agents do to prepare for their customers in response to this current climate?
Yeah. So I think the big thing is, so we touched on three things, right?
Yes.
Cyber, we talked about the regulatory environment, we talked about the economy. One of the things I think that any of us ought to be doing is, again, we can't boil the ocean with every risk point out there.
Absolutely.
But those are three pretty big risk points. And so I would just suggest that agents, underwriters, you spend the time, as articles come out, or if there's a particular economist that you like to follow these things and develop a point of view so that you're able to engage your customers in conversation and really be that business advisor and that differentiator. I think the other thing, that I touched on as well just a moment ago is that be working with the surety company, right? Surety companies don't like surprises. And, there's an old adage in our business that bad news travels slow. And if we've been seeing prompt financial information flow on a quarterly or semi-annual basis or whatever, and all of a sudden that starts to slow down, well, in an underwriter's mind, that's always going to create the question mark of, all right, what's going on?
Why
right?
is it
Why
slowing?
is it?
Yes.
And so I think, just continue to work with your surety companies, or continue to work with your surety companies, get them that financial information flow.
Yes.
When they need access to the customer to just have an underwriting meeting, help pave the way for that. I mean, that can really solve a lot of issues in an environment like this, right? Where we've got access and we can talk about what's happening. They can pick our brain in terms of what's happening. We can remind them of some of the value add that we can also bring to bear that might help them navigate some of the choppy air that we're in now, and likely what will be ahead as times change.
And I know your team has been putting out some thought leadership as well, and there's places they can go to access that thought leadership.
Absolutely.
So, as I mentioned, prior to 2018, IAT had no surety presence. And then we acquired IFIC. So, Ken, based on that acquisition, what do you think the greatest benefits have been for your group since that time?
So there's a lot of them, right? But I would
Yeah.
say just if I had to think about the top 2 or 3,
We got you. That's got to be number one.
I guess. I'll be modest. But no, I think IAT got a world-class surety operation. I mean, the company got a top 20 surety that has a strong underwriting culture, just has a strong talent culture. And so I think that, for IAT, it was also a benefit.
Absolutely.
But as I look at IFIC back in the day was constrained by capital. It was a very small company from a capital and surplus perspective. And so fast forward to IAT entering the picture. IAT now gives us a balance sheet 10 to 12 times over what we had before.
Wow, I didn't realize that.
Exactly. So that gives us much more bandwidth to do what we need to be doing for our customers. IFIC has always had the underwriting skill sets. What IFIC didn't have was the capital, really, to kind of make a business plan go as you would like to do. And so I would say it's the capital. We went, just to kind of give you some perspective, one of the measures in the surety industry is the treasury listing.
Yes.
And the treasury listing, I won't get into what all that is. We don't have enough time for that. But
Another time.
Another time. But suffice to say, we went from an $11 or $12 million treasury listing with the old IFIC to now somewhere north of just north of $80 million.
Nice.
And so that gives us much more bandwidth, again, in terms of being able to service our customers, especially those that are seeking federal government work. But I think those are probably, the financial things. And then for our organization, just to have access to a tremendous marketing team. I'm looking around the room here with our marketing folks like you. We've got other business units that are underwriters, formerly being part of just a sole surety company. That's all IFIC did. There was nothing else. To have these opportunities to engage more with the depth of our IT organization, it just helps really round us out and provides for a better competitive model, in my view.
It's been really fabulous watching the success in your group. So now we've talked about the acquisition and some of the benefits. So for folks that might not be familiar, do you mind talking a little bit about your appetite?
Sure. Our business splits into 4 or maybe kind of 3 segments. The largest segment of really the surety industry is contract surety. So think about it this way. It's any types of surety bonds for a construction contractor, anything that they could possibly need. And so in our world, we divvy that up into 2 spaces. We have what we call our standard contract surety, which are for those contractors that they're engaged actively in bidding public work, so they have the financial presentation. They have a lot of the things that a surety company is looking for to set up what we call a line of credit, right? The contractor might say, hey, I need a work program we're looking at jobs of $10 million and we need an aggregate program of $60 million. And so we evaluate all the merits of that, and if it meets your underwriting requirements, then we'll set up a relationship and a line of credit for them. Then there's the specialty side of the house, which is contractors that aren't quite ready for prime time. And that's not code for non-standard or substandard. It's risks that are excellent credit quality, but they just don't need a bond, but maybe once in a blue moon, maybe once every couple of years. And so what we'll do with them is we'll work with them, and we might apply some tools. We might use funds control. We might grab some collateral, but we're going to be, we might be willing to take compilation statements versus other types of financial statements. Might look at tax returns. And so if they have the experience and they have the financial wherewithal, we can work with those types of customers as well. And the appetite in the construction space, general contractors, general engineers, heavy highway, subcontractors, we'll look at just about all of them.
Nice.
And then we also have a close cousin, our subdivision franchise, which is providing subdivision bonds for residential and commercial developers.
All right.
And really our customer base there is a lot of the national home builders that you might recognize by name, and many also in the commercial front as well. But it's the larger ones, kind of the larger regionals that we'll work with. And then our commercial surety franchise, just think of that as everything outside the world of construction and subdivision. So this could be retail, this could be hospitality, this could be healthcare, this could be a host of businesses. And so whatever bond needs they might have, they might have financial guarantee needs, they might have license and permit needs. And so we exist to serve that niche as well. We also provide bonds for individuals at that level. So maybe some fiduciary type bonds if you've been named the executor of an estate and as it goes through probate, you've been required to serve with bonds. So it really runs the gambit of what it is that we do. I would say it's a fairly broad appetite. There's absolutes with anything, but I always like to say that we have no absolutes. So I'm talking out both sides of my mouth, I guess.
Hey.
We just want to look at the risk and make a decision and see if it's something that fits our strategy, and if so, great. And if not, we'll give you a reason why.
Well, that's really helpful to agents. You've mentioned in the past your organization has been very successful with organic growth. What's the key to your success?
I think, well, the one thing that I learned when I joined the company 5 years ago, in hearing from our agents love our people. So it all really starts, with the people. Yep. And I think for a lot of times, agents would support us through thick and thin, through the years. And I think, now, as agents look at the new IAT Surety, we rebranded a couple of years ago because we want people to think about the capabilities today, not the capabilities that were, right?
Yeah.
And so I think as we move forward, it's the people, they're better. Agents don't have to second guess whether, well, geez, I want to send this account in. I'd love for you guys to write it, but I know I'm going to probably have to move it in 3 years. And so for us, that's where the organic growth comes in, right?
Yes.
We're not going to lose accounts because we don't have enough capacity anymore. And so really our growth, a lot of it has grown, it's been organic, right?
Yep.
Accounts that IFIC 5, 6, 7 years ago may have lost because we just didn't have the financial bandwidth. We're not losing those accounts anymore. And then what's great about it too is it's also sending a message in the marketplace that, hey, IAT can, the walk matches the talk, right? IAT can handle larger accounts. And so we're seeing, new opportunities that are really more what I would consider to be middle market.
Okay. So you've talked about the capacity, and then you also mentioned the underwriters. So are those your differentiators? Are there any others?
So in our world, a bond is a bond, right? I mean, it's not like in property casualty where you can endorse things on or off or what have you. In our world, these things are pretty much statutorily driven, so you're not going to manuscript or whatever. So we're all selling the same product at the end of the day. And so in our world, you do have to differentiate, right? And so a couple of things come to mind for our shop. My 2 CUOs are adamant that the one thing I think that was ingrained in my mind was service. We're always going to try to out-hustle the next organization. And so what that means is that when we get a submission in, you need to hear from us in 24 hours. And that's not necessarily saying, yes, we're going to do it, or no, we're not, but it's at least acknowledgement that we got a submission in. And so that's been a big differentiator, and I think that's why agents have supported us through the years. The other thing is the depth of our claims organization. In addition to 12 very talented contractor or construction attorneys, we also have resources. We have project engineering, we have project architect, and we have an accounting resource as well. And so some of the thought leadership that we talked about earlier that we've shared has really, come out of that group based on their experiences. But really the way I think about that group too is I think about them in terms of, yes, they do get involved in claims, but I also think about them in terms of preventative maintenance, right?
Yes.
And so if our underwriters or our customers, using the customer example really, if they're looking to grow their business or they want to get into a different line of work or something like that, if they're open to it, we might have our accountant, our accounting resource, and maybe our project engineer just go out and spend some time with them.
Absolutely.
Well, let's look at your systems. Let's look at your documentation. Let's look at some field management. And not meant to go out there with the notion of trying to figure out how not to do something.
Yes.
It's going to be going out with the notion of help us understand, hey, if there's any gaps that we see, we want to identify those for you and talk through how we might close those.
Wow, that's pretty amazing. In the moving and storage industry right now, the biggest ask for us is to help them, to support them, to walk through new exposures. They're diversifying their revenue sources. Is there any lessons we've learned ensuring other organizations to do that? So it's great to see that you folks provide a ton of value add. And I have to agree, Ken, it's so refreshing to belong to an organization that actually listens to its partners and customers.
Absolutely.
Let's talk about what makes you excited about the future.
Well, I'm going to say technology, but it's not technology in and of itself. We're on a, I don't know that I'd probably even use the word ambitious, but we've got some significant change that we're going through right now, and just in terms of our underwriting and our billing systems. And in the old IFIC world, we had 15 systems that some were not really, some talked to each other, some didn't. And so we had underwriters having to go from system to system, and it was just very chaotic. It wasn't great workflow. We've now identified 2 vendors, and we're going through all the machinations now of user acceptance testing, and we've got through a number of machinations to get that far.
Nice.
But the goal is to go from these 15 systems down to 2 that will actually talk to each other. And then also, we talk a lot about how technology can be used as an enabler to stamp out ineffective or inefficient work process. And so there's a lot of stuff that we've had our underwriters and our administrative staff do through the years and I get questions when I go in the field, why do we do this? And I don't know. I'll have to tell them. Part of it was I wasn't with the company before, so I really don't know.
Yes.
But when they outline something, it's like, you're right. I'm not sure that this really addresses a regulatory issue. It doesn't address a risk issue. It just, well, we do it because we've always done it. And so really our path is one of, let's just get rid of all the non-value add stuff, whether it be in the underwriting or the processing or the billing process, and just have people focused on what they would probably find more enjoyable in their jobs.
Cool.
So there's that part. And then also one of our core strategies, assuming we can find the right people and the markets make sense for us, is to continue to expand our footprint. Right now we've got about 20 different locations that we're in. This past year we were fortunate to find some folks in the Phoenix area, Cleveland, and also Pittsburgh to help us grow those franchises as well. And a lot of these people in our industry, it's very provincial. And so for young underwriters that might hear this, this is just my PSA for you. Do your best to keep, to be that service provider, that solutions provider. Your reputation means everything in this business. And we know people from the left coast to the right coast, right? And so we were fortunate to find people that others have worked with in the past, and so we're very fortunate to have landed these folks. But we'll continue the search. It's not a forced march for us. We'll be opportunistic, and if we find the right people, we're going to continue to grow the footprint. But outside of that too is just our industry, in my view, is that we've got a significant talent gap. And to me, I would say that I would go so far as to say that we're really somewhat of in a crisis in the surety industry. And so for us, being a top 20 surety, I sort of feel like, we have a responsibility to the industry to kind of replenish the supply, as it were, right?
Absolutely.
And so for us, we've brought in 25 trainees over the last 3 years now.
Oh my goodness.
Which is a huge investment.
I didn't realize there were that many.
Exactly, and we'll bring some more in this next summer as well. But as you look at the need for succession, whether it be in our home office or our field office, you've got the same thing going on in the reinsurance community or the brokerage community. It really just has to be an all hands on deck approach with really all the carriers out there and brokers as well. We've got to get more talent in the business, and so it's been great having some new life injected into the organization, I guess I would say, and it also helps us with the changing demographics of America. Is you're able to bring people in at an entry level
Yes.
to where you can start to build on that a little bit as well.
Absolutely. And you folks know how to have fun. So that even helps outside of, working hard.
Bobby, speaking to a meeting we had in Nashville.
Yes.
A lot of good strategic lift, but also a lot of good cultural lift for us.
Yeah. So maybe in the future, or currently, we might be able to hear that song that you folks created.
Yeah, we did put together a pretty neat song. To me, I think it sounds very professional. We're fortunate enough to have one of our managers who's a professional musician.
Yes.
Actually had his own band, and we're good enough they appeared on Late Night with Conan O'Brien years ago.
Wow. And he's in Surety.
And he's in Surety. So that's the kind of folks we attract, right?
I like it.
But yeah, going into the recording studio, they did say that your group's a little different than what we usually get in here. So it'd be great if we'd love to share the song with anybody that would love to listen to it. And to my knowledge, it is the only Surety-related song that's ever been recorded. So
That should be in the Guinness Book of World Records.
shouldn't it?
Right, totally. So let's go back to, supporting the growth of future surety underwriters and bringing in all these trainees. So what are the characteristics? Obviously a strong financial background, but what else is more important for those folks that might be like on the fence about it or not understand really what you're looking for?
Sure. Well, for our industry too, just, maybe kind of a precursor, not a lot of people know or have even heard of the surety business, right? They don't really know what we do. And, 35, 36 years ago when I was interviewing on campus, I was actually going to pass on the opportunity to talk to a surety company. But the more I thought about it, I did go ahead and talk to them, and here's what happens 36 years later. But I think the people that do the best, and they don't necessarily need to have strong financial backgrounds.
Okay.
I mean, it's great if they've got a finance degree or risk management or some of the things out there. But I've also seen people very successful in the industry that were English majors, were history
wow.
majors. And so for us, what it really distills down to is what we do is not rocket science, right? If somebody has the aptitude, we can teach them the technical part of the business. What we're really looking for is people that have intellectual curiosity. They like variety. They can multitask. And really, most importantly, our business is all about relationships. And in relationship management. And so I would say that, if you don't have a strong desire around that, and it could be, hey, trying to sell to an agent, or it could be trying to sell to a customer. And it's not always about trying to sell what you can do. Sometimes in our industry, you do have to say no, but it's also, trying to sell a no and have people leaving that conversation still wanting to come back.
Absolutely.
So, tremendous opportunity. I would just say that I don't think there's another business like it. It's an awful lot of fun.
Yeah, and it's great seeing somebody that's been in the business a long time still having all that passion and energy for it. So thank you. Thank you for joining me today.
You bet.
And thank you so much for joining me today on What's Brewing. Remember when I said there was going to be a little survey that was going to pop up in your web browser? Can you please just take a couple moments to answer these questions? It would be really beneficial for us so we can make sure we're giving you the content you want. And I'm Bobby Goldie with What's Brewing. I'll see you next time.
There's no place that we